Well, good morning, everybody, and welcome. You're at the Audit and Governance Committee, Monday the 25th. This may well be the last audit committee for many of us in this room for various reasons. Some are retiring, some of us may lose our seats, maybe, and some of us, whatever happens, we could be on different committees. So I'd like to thank you all for your service. Some have been here a long time and some not so long, but it's really important work that we do here. And of course, obviously our independent members will be there as a continuity. I think that's a real key benefit of that process. So we will kick off first thing with apologies, please. Have we received any apologies? Sorry, I should have introduced myself. Richard Biggs, member for Dorset Poundbury, and if you could all just introduce yourself the first time you speak, that would be very helpful for those viewing online. Okay, thank you. Do we have any apologies, please?
Apologies for absence received from Councillor Trite. Thank you.
That's all, is it? Yeah, well, so we've got a few members missing, haven't we? Who've not sent their apologies. So. Yeah, I think that's something that is really important, that if we can't attend, please put your apologies in, but I know all members here are pretty good at attending anyway, but there we go. Okay, so next item on the agenda is the minutes from the 15th of January, which I've got a printed set in front of me to note the business. I can't see any errors or anything that needs updating. Are there any points?
Roger on, co-opted member. Just under the first title, present, it says councillors, and obviously my name and Simon Roche is down. Does that intimate that we're councillors, which we're not? So should it not say co-opted members?
Thank you, Mr. Ong. I think that's an important point to get that clarity. Interestingly, I went to some training for South West chairs of Audit and Governance, and they were saying the virtues of having independent members. But some committees, I think the Redmond report's a little vague on what some committees are making independent members chairman of their committees, which I think probably, in my view, is a step too far in terms of, I think it should be an elected member, but I think the process of certainly having elected members and two of them is really important for that business of continuity. But I know it is different councils having different views, but I think it's working well and it will prove itself over the years to come. Thank you. So in that case, I'll accept those with those notes for future meetings. Thank you. Item 3, do we have any declarations of interest, please? Not seeing any declarations of interest, thank you. Item 4, public participation. I'll know how to pronounce that one day. Do we have any, please?
No public participation, thank you.
Thank you. So moving swiftly on to item 3, minutes of audit and governance subcommittees. There have been several from the 11th of January and the 22nd of February, which I'm sure you've noted. We're happy to accept those. Councillor Christopher.
Simon Christopher, Dorset Councillor, Marshwood Vale. I always am given to question the cost of everything. With respect, I did even question the cost of having independent members, but that's the accountant and auditor in me. And I would like to ask Mr. Aidan Dunn whether he would be able to actually give us an indication of the cost of officers' time in respect of these hearings. And I would like to receive an email response as to how much these investigations have actually cost Dorset Council in terms of costs associated with legal services, democratic services, and the whole cost of these hearings, because I think it's information that residents of Dorset would welcome. Thank you, Chair.
Thank you. I mean, that is a very valid point. I think anyone who's sat on these subcommittees would be surprised if not thinking the same thing. It takes an awful lot of officer time and process to go through these, and it can take months and months. So I think, Aidan, is that something, Mr. Dunn, was that something you would, or Jonathan would be able to come up with an approximate figure for everybody, please?
Yes, good morning. Aidan Dunn, Exec Director for Corporate Development. Yes, we can certainly put together some costings and share them with the whole committee, if that would be helpful. It'd be indicative costings to the best of our estimate, but certainly if that will help your thinking and understanding, we're happy to do that.
Thank you very much. Is that acceptable, Councillor Christopher?
Yes, thank you very much, Chair.
Okay. There was one audit subcommittee that was also cancelled at the very last minute. This is something that does happen quite often, unfortunately, with details, or somebody can go off sick at the last minute, which is what happened in one of the cases. It is, and also quite a big burden for those members who sit on that to read very lengthy reports, often at short notice, only to find that they're cancelled at the last minute. But that's an observation, Councillor.
The reason for asking the question is predominantly based on the amount of time dedicated to this by senior members of staff on the higher levels of salary devoted to these hearings, and I think the public need to know.
Councillor Gorringe, you had your hand up as well, did I see? No, I'm imagining it. Yep, I think that is clearly noted, and in that case we shall move on to item 6, which is the planning report to the Audit and Governance Committee for the year ending 31st of March 22. We've got Mr. Ian House from Deloitte's with us. Thank you for attending in person. Would you like to take us through it before we open it up for questions, please? And you're obviously here for item 7 as well.
Good morning, everyone. Thank you, Chairman, for the invite to present this report. This is our planning report on the 2021-22 audit. Since the committee last met, we've signed off the 2020-21 audit, which was signed under delegated powers by the Section 151 officer and then signed by myself to certify completion of that audit, and we'll come on to a report about that shortly. This planning report sets out the significant risks that we've identified in relation to our audit of the financial statements. We have rebutted the presumed risk of fraud in revenue recognition, given revenue either comes through council tax, national domestic rates, or grant funding. It's not like a company set of accounts where you've got lots of invoicing going on. So in this case, we've said we don't believe that there's a significant risk of fraud in relation to revenue recognition or grant income. In the prior year, we'd considered that in relation to COVID-19 grant income, both because of the classification issues with that and the volume of COVID grant income that was coming in. In relation to having a fraud risk, we've identified that in relation to the capitalisation of infrastructure assets and assets under construction, particularly because it's quite complex in how you account for those things and the treatment of them. And therefore, there's an opportunity to manipulate that and move expenditure from revenue to capital. We also pick up there, in terms of property valuations, we've split that into terms of the actual valuation as by the external valuer, and also looking at the accounting for the property valuations, because that's quite a complex area of accounting in local government. And therefore, we look in specific detail at the opportunity for a significant error in that area. So that's just to bring you up to date with the significant risks that we're covering off. During the prior year, we identified a number of misstatements which were unadjusted, and they've adjusted our performance materiality in the year, so we'll be sampling a little bit more this year because of the errors we found in the prior year, but that's normal practice where you find errors. In terms of value for money, our work is ongoing. There is a national movement that we're required now to report on all years of audit that are not being reported on in one report, which will be issued this summer, which will be the auditor's annual report, and will cover the value for money in the years 2021, 21-22, and 22-23. So that's the introduction and the summary. On page 31 of your, page 32 of your pack, we cover off our materiality. Materiality for the accounts, i.e. a number that we believe, should the accounts be wrong by that amount, would influence the decisions made by a reader of the accounts, has been set at 15.3 million, which is up from 14.8 million in the 2020-21 accounts. It's based on the same measure of gross expenditure of 1.7%. As I mentioned, our performance materiality is reduced due to errors found in the prior year audit and unadjusted. Moving on through the report, I'll take it that you've read most of it. I'm just giving you the highlights at this point. We set out on page 36 and 37 the potential impacts of COVID-19, because we are going back to a period when that was still an issue, although we felt that in this year's audit there would be less of an impact than in the prior year, and that's summarised on the various points that are raised on those slides. Page 39 gives a highlight of the significant risks, which are management overrider controls. That's in every audit that we do, and every audit that any firm does, you will assume that management can override controls. We were looking at the completeness and accuracy of accrued expenditure, making sure the right expenditure is in the year, and that there's not an opportunity to perhaps leave it until the next year. So as you understate expenditure in the year in question, when you're up against a tight budget, there's an opportunity potentially to, miss a few things off at the year end. So we'll be looking out for that. I mentioned capitalization because you can move things from revenue to capital if you don't use the rules correctly. Property valuation, they're huge numbers in the accounts, so we always look at those and how you account for them. As I said, that's very complex, particularly where there have been previous impairments and depreciation, etc. And then the pension liability valuation, a huge number in the accounts, again, subject to small changes in assumptions can make a big difference in that number. So again, we look in detail at that. Chairman, I think that really highlights all of the key issues I'd like to bring to your attention. We set out in the appendices the unadjusted misstatements from the prior year, but we'll come on to those in a minute when we look at the prior year report. I commend the report to the committee for their approval.
Thank you very much, Mr. Howells. Are there any questions from the committee? I've got Mr. Roach first.
Thank you, Mr. Chairman. Simon Roach, Cooperative member. Thank you for that summary. My question is about the work that you have to do to get a good understanding. You talk about a strong understanding of the control environment that was in place. I suppose we're looking at 21, 22. That's a couple of years ago. And I imagine it must be a little bit more difficult to understand the process and systems and controls that were in place at that time because it was a couple of years ago. So my question is, are there additional procedures that you need to perform because of the time that has passed between the audit period you're looking at and now? Procedures that would be additional to what you would typically do. And if there are additional procedures necessary, is there a cost associated with those? And are you bearing that cost if there is a cost, or does Dorset Council bear that cost if there is a cost? Thank you.
Thank you, Councillor. Very valid and excellent question. We do look back at that control environment. Thankfully, we've been the auditors for a long time, so we have a good built-up cumulative knowledge of how the council works. This audit does not assume a controls approach, so we're not placing reliance on the operating effectiveness of controls. Were we trying to do that, I think your question would be, we would have additional work to do. In this case, we just understand the design and implementation of those controls, and the evidence exists to be able to substantiate that in the same way we would were we doing the audit concurrently with the financial year. So not expecting a significant change in the approach because of that delay.
Are you happy with that, or do you wish to explore that further?
Thank you. That's my answer. My question answered. Thank you.
I have a number of questions, but I'm looking around the room first, and I'll get Mr. Christopher, and then Simon, Councillor Gray.
Thank you, Chair. Councillor Simon Christopher, Marshwood Vale. I'm looking at page 8 of the report, and I see this is described as a report tailored to you. I must wonder whether you could have put bespoke, but tailored to you. Is it really tailored to you when all this is so historic, and the delays that you wouldn't have seen in respect of a listed company required to report on a timely basis, or an average traditional private company having to report within 9 months? And then I see the phrase value for money, and I could look at the key core part of the audit fee of £180,000, and then I question, given the lack of timeliness of all this, whether this indeed does constitute value for money. And I'm going to give you one little quote at the end. I understand that Dorset Council is responsible for 250,000 trees, but I should imagine any reader of this document would really wonder whether they could see the wood for the trees, because it is so historic. Thank you, Chair.
If you wish to come back on that, and there's a lot of comment there, but I think there's a question there. Thank you.
Thank you, Councillor. I understand your frustration. I understand the comments that have been made. I believe the audit is tailored to the organisation and the specific risks that it faces, although I understand the points that are being made around the timeliness, which is an issue that we've been affected by. All firms operating in this market have been affected by, and as we've rehearsed at length at this committee, there are national issues that have led to a number of the delays, as well as specific ones related to us. So I understand the frustration, but I do believe it is tailored, and significant progress has been made already on the audit that we're talking about. Indeed, most of the detailed testing should be finished by the end of this month, and then we'll be on to the review process of that work over April and early May.
Thank you. Councillor Gray.
Thank you, Chair. Councillor Gray, Radipole in Weymouth. I've got 3 questions, Chair, if I may. Limited to 3. Well, not a question, but sort of, I'm looking at this as in, I know this is 22 and we're now in 24, and I'm sort of looking at my questions in relation to the new council. So what needs to change? Comment really before the questions, which is probably, if I term it, if you want councillors to really get to the detail of this, it needs to be in plainer English. It's a mega report, and the time invested in this, if you're not financially trained, it's the council, not the auditors. The council needs to direct the auditors to make it simpler. That would be a comment. I'll come back to that. My questions, the first question is, I'm into the details, so my first question's around, and I've got an eye on the Q3 outcome, the Q3 outturn, which is next, around the capital programme. So this is relating to 22. It talks a lot about slippage. I want to ask probably Aidan that when we're considering capital programmes, because it has a big effect on the finances of the council, both in terms of interest and loans and all the rest of it, because we see in the Q3 output, again, that we've slipped. We've completed 67% of our capital programme for this year, which is the best it's been, I think. But my question is, when we're looking at capital programmes, and I understand the market forces here, do we, as a council, build contingency into the capital financing programme of any capital programme? Do we look at alternative plans? Contingency in both in pounds and in time, because we seem to be ever perpetually in this slippage issue. And if you look at the 25, 26, 26, 27 capital programme, all we're doing is shifting a problem further down years to come, and it's getting bigger and bigger. The capital programme is getting bigger and bigger because we keep pushing it. So I wonder what's changed, because we've got a capital programme committee, I think. Do we look at contingencies, both in time and money? Do we look at alternative suppliers or plans? I know some of it's specialist, but we've got to get a grip of this somehow. And my last point is, do we really take the optimism bias that this council's got on capital programme really seriously? Because we don't seem to be learning the lessons of the capital programme slipping, which has an effect on the finances. That's question one. Thank you. Sorry.
I think that question is probably more directed behind you at our finance officers. I'm sure Mr. House has an opinion, but I think it's probably for Aidan or Sean to answer, please.
Chair, would you mind if we answer that question under the Q3 report, and we can give a comprehensive answer? Whether there is an external audit observation or anything Mr. House would perhaps wish to comment on, I'm not sure.
House, do you have any comment on that?
I think all I would say is nationally we see a very similar issue, both in local government and in the NHS actually. Capital programmes seem to be slipping, the costs are rising rapidly, which makes it quite difficult. Supply was an issue at this time in terms of material supply, as many of you will remember. There were supply chain issues. So I think, you know, Section 151 officer will give the detail around this council, but my observation is that it's not unusual in terms of other councils that I deal with and the NHS to have significant backlogs in the capital programme. Doesn't make it any different, but that's the context.
Thank you, Mr. Councillor Gray. You have other questions?
I'll save my comments to the end. Yes, second question is around, and the next two questions really, I'm sitting here thinking, wow. When we did the valuation of car parks, the auditors picked up the fact that we didn't include the cost of running the car parks in the valuation, which to me is staggering. So I'm looking for reassurance that going forward, we do include all the costs of the 30 car parks we have in terms of running them, machines, all this, because materially it's 5.7 million. So have we fixed that problem, I suppose, is the question.
Again, that's one I guess Sean or Aidan done.
Yeah, I can confirm that essentially anything that's identified as a kind of recommendation in previous years has been picked up as we kind of go through the subsequent years. I suppose one of the I suppose silver lining type things of running quite late on these is that it's meant that we've been able to actually have smoother following year audits, because anything picked up in, for example, 2021 or 21-22 has been corrected simultaneously in all the kind of open audit years at once. So anything identified in a previous audit is picked up in the next one as well. And I'm sure Ian may be able to comment on some of the work they've done so far to confirm or deny if they've picked up anything recurrently in years.
Thank you. Next question, please.
Comment on that, Chair, would be I would recommend that scrutiny call in car parks specifically in the next few years to really look at the value of car parks, because it matters to residents what we do with our car parks and what we charge. So that would be a recommendation. My third question is incredulity, really, and Aidan would expect me to ask this question. The statement is, senior management remuneration is not tied to financial results. Does he think that's right?
Question. Mr. Dunn. Mr. House, you wish to come in on that one?
Well, it's our wording, I suspect, so I suppose I ought to answer that question. What we're referring there is in a lot of places you might have a bonus type system, and that's what we're referring to. So we're specifically referring to the fact there isn't a bonus system related to that. Clearly, financial officers, their performance is assessed and they live by the success of their performance, I guess, but there isn't a bonus element in terms of the payment that we see in a private company, for instance, and that's what we're referring to in our wording in our report. So just clarify that.
I think that is a fair point. And certainly in civil service, it used to be a performance-related pay element, which was just, it was abused because the whole system was, people skewed things to look good, and it didn't encourage the right behaviours. However, I know it's a widely used thing in the private sector, but I'm not sure it's appropriate in the public sector.
It might save some money on payroll.
Got a number of people wishing to speak. Simon Christopher, then we've got Mr. Ong, and then the Vice Chair.
Councillor Simon Christopher, Marshwood Vale. Turning to page 25 of the report, which I think is probably about 49 of the agenda. It's on this page that we start to read about misstatement identified in the previous year, in the prior year. I would like to hear from the external auditor and the Section 151 officer, not merely in relation to the materiality of those misstatements, but the number of misstatements. And I would be pleased to listen to their comments about the number of misstatements, which is truly disappointing. I'm sure the residents of Dorset Council would be interested in your respective answers. Thank you.
I would like to think that the sort of number is a relation to the detail of the audit and what it's gone into. The numbers in terms of totals are nowhere near our materiality of 14 million for the year in question. Indeed, the previous question on the valuation of car parks, the professional valuer employed by the council had made that mistake, and it was only because our experts were challenging them on the basis that did that come to light. So in many ways, I wouldn't expect the finance department to have picked up on, for example, that one. Yes, I'd like to see fewer errors in the accounts, but as we say, this is an iterative process. The council learns from what we bring up and raises the issues they're addressing, the points that we raise, and I indeed can see that a lot of what we raised in the 2021 audit has already been taken into account into the 21-22 draft accounts that we've received. So you can see the shift already in terms of where that's gone. So yes, I'm sure we'd all have liked fewer unadjusted misstatements, but we are comfortable that they're not material. Some of them are very technical in nature, like the Goodwin ruling and some of the valuation points, because they come out as a result of later information. So when the accounts are produced, you may not have the very final valuation information, for instance, that we had when we came to it with huge amount of hindsight, given the time that had passed by the time we completed this audit. So some of them relate to that as well.
Mr. Christopher, Councillor Christopher. Okay. Size and complexity of that.
The auditor report should adequately plan and record his work. So could we say that there was a deficit in the planning of the audit? Because we're left with a situation where we have historic audit figures, and this is arguably not a high bar to pass, i.e. the accounts should show a true and fair view. It doesn't actually require the true and fair view, yet we do have quite a number of misstatements, and therefore that reduces the level of confidence of the reader. I am wondering, Chair, whether you are minded to actually write to the local government minister expressing concern over the audit process. I don't know what other members think.
Mr. Dunn, you wish to comment on that?
Can I just come back on the comment about residents' concern about the value of the misstatements? So I just wanted to put this into context because on page 49 of the report, 49 of the agenda, 25 of the report, the bottom right-hand corner in that number shows overall material misstatements identified in the prior year, 1.4 million. In the context of the scale of our organisation of 370 million in terms of net budget. But then we're also talking about the pension fund, which is sort of approaching the realm of £3.5–4 billion. And then we're talking about the context of asset valuations where we've got over sort of 1,000 assets. So I think whilst we are striving to be the absolute very best that we can, and as we've heard from the external auditor, that sense of improvement, year-on-year improvement, I think I wouldn't want anybody watching this meeting or attending this meeting to see this as a really significant concern. I think what we're hearing from the auditor is actually that these accounts are good in terms of that approach, but we can continue to get better. And so I wouldn't want any sense of erosion of confidence here. In terms of the sheer scale of this organisation, I think this is a pretty reasonable result. Thank you.
And perhaps I'd ask Mr. Howes, compared with your experience of working with other authorities, how does this compare, I guess?
I'm working with another unitary authority at the moment, and this has probably got less than half of the errors that I've identified in that audit. What I didn't follow in the question from Councillor Christopher was the issue around our planning and why there's a conclusion that there was some weakness in our planning when we've identified this level of issue. I don't follow that conclusion, I'm afraid. I believe our planning was robust. Our planning was set out in an audit planning report to this committee, and we've reported on how we've addressed each of the significant risks identified in our plan in the next report that we will come to, which I believe demonstrates a thorough and detailed audit of these accounts.
Okay, I'm going to move. Is it brief, is it, Mr. Christopher?
Yes, I will be very brief. I think planning is not unrelated to the delay in receiving reports, and I have to put on record that there is cross-party admiration for the work undertaken by Councillor Gray, and when I see Councillor Gray mystified how these events have transpired, then I also am troubled.
Okay, there's a comment. I think we got Mr. Ong, then Vice Chair, and then Councillor Baldwin.
Thank you very much. Just seeking one out to clarify my own mind on the materiality. You've got on page 35 of the agenda, the gross expenditure, which triggers the percentages, is 901 million. The actual council budget is in expenditure 376, and I just wasn't sure where did the 901 million come from on that basis. Thank you.
Mr. Howes?
The gross expenditure from the financial statements, so it's how the financial statements set out compared to the council budget is quite complex, and there's a big reconciliation of how you get between the two. But this is the sort of gross expenditure level before income and grant income, etc.
Does that answer your question, Mr. Ong?
I think I'd personally probably still a bit bemused. As I say, the flyer that was sent round on Dorset Council's expenditure for the next year was 376 million. So I'm still struggling to come up with 901 million, I'm afraid. But that's just me.
Financial team, Mr. Dunn.
Thank you. And this comes back to the wonderful world of local government finance and the complexity between gross and net budget. And I can we'll give you a breakdown afterwards. It's published in our budget book. But if we take very, very simply, for example, one of our largest grants we get is for education funding. So that essentially we get it from government and we pass it on to schools directly. So that's it's about 300 or so million. And so that's excluded from the net budget because it's not something we particularly influence. But in terms of money going through our books, it's the 900 million. Money that we control and influence and account for is the 370 or so million. But I can give you a more detailed breakdown of those different grants outside of the meeting.
You happy with that answer? Good.
Yes, thank you very much.
To my vice chair, please, Susan Cocking.
Hi, Councillor Susan Cocking. It was just really, Councillor Christopher already asked some of the questions about value for money, and I would be very interested to see what the extra fees are incurred by Dorset Council for the extra work for the audit. What controls are in place so that we don't incur any extra fees for the next audits, whether it be this auditor or any future auditors that we have. And then there's just a quick, easy one for you, Ian. On page 52 of the agenda, page 28 of the report, there's a typo where it says, in corporate development income testing, one item has been incorrectly where it should be been. So at least you know I read it. But yes, it was just really about the fees and how we're going to stop getting extra fees, what controls are in place that we don't get any extra fees, because otherwise, you know, it's not really a proper contract in my mind and not value for money, because we've asked for this work to be done within a certain fee and it hasn't.
Mr. House.
Yes, thank you. Obviously, a very valid question for a councillor to be asking around the stewardship of the finances. The process in place is that if the scope of the work changes, then we would seek additional fees for that. So there are things around infrastructure, for instance, we couldn't envisage when the fee was set. We will propose the additional fees to the finance team. They will then put forward their view as to whether that's a valid additional fee. If we can't agree, then the process allows for the PSAA, with whom we're contracted to do the work on your behalf, to then look at that. They will come in and look at the extra work that we've done and decide whether they believe the request for additional fees are valid. As we've said before, this continuous improvement process of building on things and improving things, producing the accounting papers we've asked for, improving the control environment, all helps to control the cost and make sure that it doesn't go up. I'll leave the finance team to comment on what the fees are under the new contract, because they're significantly different to the ones that we see here.
Mr. Dunn, you wish to come in as well?
Yeah, thank you. So just to pick up on a couple of points there. So we are changing our external auditor, which is part of a routine cycle of audit cycle, and it's the change is conducted by PSAA, which is the Public Sector Audit Appointments. So we'll be moving to Grant Thornton, who will be auditing the accounts for 2023-24 onwards. So as you can imagine, it's quite a complex picture at the moment as we're looking at 21-22 accounts, 22-23, and then moving auditors into 23-24. In terms of the fee regime, it is set by PSAA, so the national body, and the sort of performance or the funding or payments are related to milestones that we achieve as we go through. But there is a there's little room for us as an authority to manoeuvre or set rates because we're part of a national agreement. But value for money is something, nevertheless, that we're working hard to make sure, and to make sure that we're doing everything that we need. So at the moment, in terms of the relationship with Deloitte, myself and Sean and colleagues are meeting with Ian on a weekly basis to make sure that they've got the information that they need from us, and we're sort of monitoring on progress as well. So that's a weekly check-in, looking at the existing audits. We're also meeting regularly with Grant Thornton as part of the transition arrangements, so that Grant Thornton know where Deloitte will be in terms of the finishing line, ready for Grant Thornton to pick up as well. So that's part of the arrangements. And finally, and related to all of this, is the audit of the pension fund, the Dorset County Pension Fund as well. And we've got a separate weekly meeting as those. So there's a high degree of intensity in terms of trying to push these audits over the line. But it comes back to that point that we don't want either party to be sat waiting for the other. That would represent slippage, wasted time, when we're all under so much pressure to get this done.
Thank you for that. And I know all councils are obviously facing significant increases in audit fees, which is a national issue. I've got Councillor Borden first, and then Councillor Gray, and then Councillor Christopher.
Thank you, Chair. Belinda Borden, Lyme Regis and Charmouth. I think a couple of people have already raised the difficulty of some of the language in the report. Looking at page 78, there were several sentences there that made my head spin a little bit. But I'm just wondering, it's on the infrastructure assets, the risks identified, and it talks about de-recognising components. Concerns were raised that local authority were not de-recognising infrastructure assets after they'd been replaced by additions. And there are a few other sentences a bit further down, useful economic lives, for example. Is this, in sort of simple language, is this saying that we don't have a reliable asset register and therefore are not really on top of not only what we're owning but what we're maintaining? Because I'm certainly finding that on the ground. But yeah, there's a sort of comment about the making the language a bit more comprehensible, as well as, is this a current issue? Because from my perspective, it feels as if it is.
I think that's a really good point, and certainly a number of the points revolve around the assets and some of the language in that. So I'm sure Mr. Howes will give an answer, but it may be that new committee may need a bit of training as well, and understanding, so that, because it does seem to be a recurring theme on these reports. Thank you.
Thank you, Chair. Yeah, more than happy to try and help with that, and apologies if the language, is quite complex on this. So there are national issues on infrastructure. So by infrastructure, we're talking about roads, bridges, footpaths, those sorts of things. Indeed, many councillors refer to them as liabilities rather than assets, because basically you just have to spend money on maintaining them. So there's a national issue whereby when you're, say, resurfacing a road, all that happens is the additional costs of that are added to the value of the infrastructure, rather than saying, well, there's nothing that we need to revalue it from scratch, or if you build a new footpath, some of the old footpaths that are being replaced are not being taken out, so the value is just continually increasing, subject to what we call depreciation and sort of a measure of using up of that asset. So that's a national issue. There are other issues, like in your case, some of the records passed to you by the district councils in terms of infrastructure, and the detail of those isn't there, so you've got a difficulty to know. You know how much you got in, but is it the split between roads, footpaths, etc. is not clear. And that's an issue again across the country, where some of the older records, it's very difficult to unpick exactly what makes up the balance. The UEL's useful economic lives, that's an accounting term for how long you think it will take before that asset is used up, is no longer of value. And that drives the depreciation, how much is used up each year, and there's a charge goes through in the accounts. Because of these complex accounts, we then reverse that charge back out of the account, so as the council taxpayer isn't paying for an accounting entry. And you can start to see some of the complexity of us trying to explain it, but I do understand it's the language is quite difficult and quite difficult to follow.
That's the board again.
Thanks. So does that list that you just mentioned, does that include buildings? And I suppose my follow-up question is from my perspective, it doesn't feel as if the way that the department that's dealing with it it doesn't feel as if it's adequately resourced to be able to get to the bottom of it and actually move on. I've only been a councillor 2 years, and I've been on about this for 2 years, and it doesn't seem to be changing. But can anyone give us any assurance that the situation is going to get better and that we will have a much clearer picture of what we own and therefore what we're responsible for maintaining?
I don't think that's a question for Mr. House particularly. I found one of Aidan. I mean, I know it's an issue, asset valuations, etc., and there have been problems. I mean, Mr. Dunn, are you able to comment, or perhaps we need to get somebody to a future meeting to explain this?
Thank you. I think there's two issues, and I think it certainly would be helpful to bring to a future meeting. The issue of the valuation of our assets is, we have had issues with the contractor that we asked or contracted with an organisation to value those assets, and we've encountered some delays and challenge there, but we've since resolved that. So that's one issue. But the point around so we know what assets we have. Is it the visibility, as in your concern as a councillor, or a lack of awareness from your perspective? You don't feel as though you know what's in your particular geographical area. Is that the point you're making?
No, there are several assets that are, as was referred to, that as in the change up from West Dorset District Council to Dorset Council, there's still quite a significant number of places and buildings and sea walls, for example, that it's not clear who is responsible, who owns and who is responsible. And we're trying to have those discussions. But I'm concerned that the department that deals with it, there seems to be an awful lot of pressure on those officers trying to do that work. And I'm just wondering whether or not we feel comfortable that the department itself is adequately resourced to be able to sort all these issues out. Because, you know, as I say, on the ground, it means things are falling down. So therefore it becomes a bigger expense because it's all last minute and urgent. Whereas having an asset register that we all agree and understand between town and parish councils and Dorset Council, and it being clear that the ownership has been agreed, and therefore the asset maintenance programme, if you like, is clearly agreed, rather than it all being kind of last minute and a bit desperate. But I'm wondering if it's, you know, as I say, there seems to be quite a lot of churn in that department. Do we feel comfortable that the resources are there to get it right going forward?
So I think there's some real valid points. I'm going to give Mr. Dunn a chance in a minute. I just think perhaps they're drifting slightly off the topic, which is the issues identified within the audit. But I think they're valid points, and we're all aware that there some perhaps improvements that may or may not have happened. It may be down to capacity, it may not be. So I think we'll sort of move on from that once we've heard Mr. Dunn's comment on that, please.
So I'll take that back to the relevant department to get the latest update. I think in terms of resourcing, one of the things to have highlighted in the budget that Council approved last month, the flexible use of capital receipts policy that Council agreed, it essentially allows us or authorises us to, when we do sell an asset, to use that money to invest in that particular team to help sort of progress the development. So I think, so there is funding available, and the question is it being used in the right way? And that's the question that I'll take back to the relevant department.
Thank you. I'm going to move on to Councillor Gray, please.
Thank you, Chair. I wanted to go back to a previous question that my colleague over here asked around the net and the gross spend and the percentages expressed in the report. So it would be useful if we're going to express it against gross, that we also express the percentages against net, so that we understand that 600 million of the 900 million we don't control. So the percentages should be expressed against the actual spend, because it's sort of making the percentages look better than they are if you're measuring against gross, of which 2/3 you don't control. Thank you.
Mr. House, would you like to comment on that? That's a fair point.
I think useful point. We can reflect on future reports how we at least give you a reconciliation between the numbers we're using. We have to use the gross because that's the sort of level of expenditure being passed through the accounts that we're auditing. So we have to start at that highest level. But I think it's a very useful point to say that it would be helpful for us to reconcile that to the number you're more familiar with from council tax setting documents and the budget itself. I think that would be very helpful to the reader. So yes, I appreciate that.
Thank you. I'm seeing a nod there. Councillor Christopher.
This is a legacy point, given that some of the members of the committee may not be here after the 2nd of May, but mention has been made that the independent members will be here. Would it be possible for certainly the independent members to receive a copy of the engagement letter, the original engagement letter with Deloitte, and indeed the engagement letter with Grant Thornton, so that they have a better understanding of that engagement letter and what's contained within it, for their understanding of the contractual arrangements between Dorset Council and the external auditors?
That seems a sensible question, but Mr. House, would you like to comment on that?
I think just for clarity in the minutes when you come to write them up, I think Councillor Christopher is a very valid point, but it's the contract between us and the PSAA, which is probably the one that sets out the arrangements you're interested in rather than our engagement, because we effectively contract with PSAA, not with the council, to do the audit, and therefore it's the contract with us and PSAA which contain the information that Councillor Christopher refers to. So I think for the minutes, that would be helpful for you.
Is that something we're okay with doing? I think it seems like a sensible idea, but are there any commercial reasons? I can't see any reason why that couldn't be done.
Thanks. I can certainly look through. It might not be a public document that we want to share, but I'm certainly happy to brief the independent members as sort of a package of information, really, I think, to really sort of paint the picture of what we can expect from our external auditor and consequently what we need to, what our side of the arrangement is as well. Excellent. That makes sense. I have a few questions. I think I'm not seeing any more around the table. So thank you for those answers. I'm looking at page 10 of your report, Mr. Howes, which has got the swim lanes and the time lanes on the bottom of it. And according to that timetable for the planning, it's taken 2 years. Well, I think that has been discussed on numerous times on this committee, but I think it's worthwhile just repeating very briefly
for this committee, and perhaps newer members why that is. I've got a number of other questions, but if you could just briefly answer that, be grateful, please.
Thank you, Mr. Chairman. Yes, I think we've been through at length some of the issues that have arisen which delayed the 2021 audit, and that has had an impact on, obviously, the subsequent audits. A lot of those were related to the infrastructure assets, as councillors have just asked. It's a very complex area. Questions were raised in one audit around this issue around components not being de-recognised. That led to a national piece of work to understand what was happening at each of the councils. We then awaited guidance on the solution to that, which the council has availed itself of, which is to have reduced disclosures in relation to infrastructure assets. They're unusual because they're accounted for at cost, when most of the assets are accounted at this modern equivalent asset valuation. So they're unusual in that respect as well. So there was a lot of work around that. Some of the delays have then led to issues with the pension fund audits and how we deal with that, given there was a triennial valuation in the period, which meant there were later information available. So a lot of that has led to the delays, which means we've been trying to progress this audit alongside closing out the 2020-21 audit. So we have made a lot of progress on the audit. As I said, most of the fieldwork is already complete. There is a national proposal jointly from the National Audit Office, who set the sort of rules for the auditors, and the Department for Levelling Up Housing and Communities, on what to do with the significant number, and there are hundreds of audits delayed across the country. The current proposal, which will need to go through Parliament, is for a backstop date of the 30th of September this year. And what that means is that every council will need to publish at that date their audited accounts with an opinion on them for every year up to and including 2022-23. If the audit has not been completed at that point, which will be the case in hundreds of cases, a form of opinion called a disclaimer will be issued on those accounts. And that disclaimer opinion basically means the auditor was unable to give an opinion on the accounts. If sufficient work has been done at that point to conclude on certain aspects, then the auditor will conclude on those aspects and disclaim any areas that are not complete. Alongside that, as I mentioned earlier, there will be a auditor's annual report on value for money, which will cover all of the years up to and including 2022-23, which looks at the arrangements for securing value for money rather than does the council represent value for money, which is clearly a much bigger piece of work than our audit covers. So I hope that gives you a sense of what's going on both locally and nationally around trying to resolve this backlog, so as councillors can be talking about current and relevant audits and accounts rather than historic ones, which are now a matter of record rather than relevant to the sort of decisions that are happening around the budget, for example.
Thank you for that, Tracy, of where we are and how we got here. I think that's useful. Before I take Councillor Christopher, I've got a number of other points. So looking again at the programme, how will Deloitte's contract with NHS affect the planned work for April and into summer 2024?
My question revolves around page 85. The microphone is on.
I think I'm live now. Thank you, Chairman. I'll just...
That's it, yeah. Yeah, sorry, Councillor Christopher, I've got a number of questions to ask. When we've dealt with those, I'll come to you. Okay, sorry about that. So yes, we're just asking about the NHS, your work for that and how that affect or not affect.
Yes, thank you. So we are being advised that we should continue to deal with the NHS audits, because the people that do this local government work and the NHS audits tend to be the same skill set, so it's the same sort of group of people. In this case, the audit that we've presented a plan for, the 2021-22 audit, the fieldwork will be complete before we start our NHS work, so it shouldn't affect the completion of 21-22. Some of the senior staff who will be doing the review work come into their NHS period, like myself, much later in June, so there is time for us to complete the reviews of this work on 2021-22. The issue then, Chairman, as you are probably alluding to, is the 2022-23 audit and how we fit that in, particularly given Grant Thornton's eagerness, as you would expect, to get on with the 2023-24 audit, so as you're getting timely assurance on that. The exact workings of how that will play out, we are still talking to the council about and considering how we might resource that for the best possible outcome, given the difficulties of timing at the moment.
You've more or less answered my third question, so I'm not going to... one other question. Whilst we recognise that the council has new auditors for 23-24, what are Deloitte's view on the council having effectively two months to look at the accounts, but the auditors having 12 months to look at the audit for 23-24?
Clearly that doesn't seem that equitable, does it, that the council has a couple of months to prepare the accounts and the auditors seem to have an awful lot longer to do it. I don't really have a great answer for that, other than the complexity of an external audit these days. I guess the complexity of producing the accounts as well. It is very difficult to get through this work in the time. We also have to bear in mind that the finance staff are working on other things when we're trying to do the audit, whereas they tend to try and make as much space as they can to complete the accounts. But the aim of the legislation that is being introduced is to reduce the period of the audit and bring it back to the old timeline, which would have been that the accounts would be signed off by the 30th of September following the end of the financial year. So if the end of the financial year was 2024, then the idea would be the accounts would be signed by the 30th of September 24. The proposed timeline is that that will take some time to achieve, and that it will be brought back to that over a period of time. There's a lot of things that have happened that have led to the additional time for audits, which I won't rehearse in detail here, but I think there are proposals on the table to make it a much more timely process and much closer to the timeline that we've all been used to, so as timely assurance is provided to members and therefore on behalf of the public. But a lot of work needs to be done to get to that point, I believe.
Thank you for that somewhat cheeky question, but I think it's a fair point. Councillor Christopher, sorry, you can come with your question now, please.
Yes, thank you ever so much. I think it's on page 85 where it talks about the county farms estate, and 85 of the agenda, and the audit of the county farms estate. And I'm conscious that I read about the internal valuer, and I don't read anything about an external valuer. And of course, there's always the possibility of management override, etc. I'm hugely conscious that we're living in a great time of change for farmers and regulations, rules and regulations about compliance costs, etc., and farming infrastructure and the need to protect rivers, etc. Can you talk, please, about auditing for post-balance sheet events and the obligations of Dorset Council, etc., and how you're going to assure yourself that there will be an appropriate valuation of the county farms estate that isn't necessarily just reliant on an internal valuer, which may be the subject of management override?
Challenging one there, isn't it? Mr. House.
I notice we've strayed on to the next agenda point. I'm happy to answer the questions, your Chair, or wait until we come to that report. It's your up to you.
Yeah. Are we happy to take that under the next item? Yeah. Okay. So that has involved quite a good lengthy conversation about that, and I think that's good. So we move on to item 7 in front of you, which again is going back into the mists of time somewhat, and it is very much past events. But do any members have any questions on particular points? I think which has really been discussed, was on the valuation of property, but I think we've pretty well discussed that in the general conversation previously. But Councillor Gray and Mr. Roach.
Thank you, Chair. A couple of questions. Same question as I always ask around the dedicated schools grant, which sits now as a negative on the balance sheet at 45 million at the end of this year, probably. That's got significantly worse in the last year. So, and Aidan always says, well, we're talking to the Department of Education. I'm wondering, ready for the next council, when are we going to conclude negotiations with the Department of Education? And what does he see as the outcome? Because if we have to take that debt onto our sheets, it's significant. I think it's 23 million this year. It's got worse, and it's now sitting at 45. Thank you.
Mr. Dunn, are you able to answer
that? Thank you. So negotiations with the Department for Education are still ongoing. The latest conversation we had with the department, we had a joint inspection 2 weeks ago. So that's Ofsted and CQC inspecting our special educational needs services. And so we have agreed with the department that we'd await for the outcome of that inspection so that we can, if we need to adapt our plans accordingly, we can factor that into our financial modelling. So the latest proposal is towards the end of June is where the discussions are heading with the Department for Education at the moment.
Positive dates there. Are you happy with that, Mr. Councillor Gray?
Best I'm going to get, I think. I've just got sort of compliment really in the report. I didn't get a chance to ask at the full council, but the debt management seems to be coming along nicely, given that we're improving our debt collection. I'd like to see some stretch targets for the next 5 years in there in terms of the percentage of collection of business rates, collection of council tax and legacy debt. Place seems to be if you put aside the housing debt issue, which we know is linked to sale of houses, the place debt is still slightly worrying. So well done, but I still think we've got more to go on debt.
Mr. Roach, you had a question.
Thank you, Chairman. Can I just clarify, we're on item 7 now? Is that right? Yes, okay. I've got 3 questions, if I may. So the first question relates to Deloitte audit quality and risk of fraud. So there's a reference to an independent review that is done of Deloitte's by a third party to give assurance on the quality of audits. And I had a look at a recent report from that independent body on Deloitte, and it referenced that in one audit performed by Deloitte, insufficient procedures were undertaken to address privileged access, and therefore Deloitte did not sufficiently respond to the risk of fraud. Now, in the management observations in the 2020-21 audit, there is a comment, I think it's on page 97 of the pack, which talks about the number of privileged users, privileged access that a number of users have. It talks about 105 privileged users, 103 with systems administration access to the database. Now, it's not clear what privileges are offered to those 103 people, but that sounds to me like a large number. And then thirdly, in the recent meeting where we looked at risk management, I think Councillor Legg raised a concern about the speed with which Dorset Council is looking at cyber security risk. And I guess my observation is that given there's a significant number of these privileged users with systems admin access, that represents actually a large population for people trying to exert cybersecurity breaches to go after. So my question, given that, to Mr. Howes is, can you assure us that you, given those factors, that you undertook the necessary procedures to satisfy yourself and ourselves about there wasn't an unnecessary risk of fraud? And if you did, could you just summarise what those procedures were? Thank you.
Thank you. Mr. Howes.
Thank you. So if you are taking a controls reliance approach, then clearly if there are privileged user IT access, you have a problem because people can override those controls. In this case, we take a substantive audit approach, so we do detailed testing of transactions. Our journal entry testing covers all of the journals completed, so we sample those based on fraud risk factors identified in our planning work. So in this case, I do not believe that we haven't mitigated the risk because we've produced substantive procedures in relation to that. If we were taking a controls reliant approach, then we would have had to have done an awful lot more around what could have those users done to the transactions to understand that. And I believe that is the issue raised by the Financial Reporting Council when they reviewed one of our files where we were taking a control reliant approach.
Thank you. And so do you increase your sample sizes to take account of those control weaknesses in the environment, such as the one that you raised in the management observations?
It depends. In terms of the journal testing we do, it isn't on a sample basis per se. We took the whole population of journals processed through the financial ledger, and then any ones that trigger our analytics on terms of the fraud criteria that we've set out, which may be transactions to an unusual account. They may be transactions by a user who only posts 1 or 2 transactions a year, which we would say is a bit unusual. We would certainly look for transactions posted by Aidan and Sean and understand exactly what has happened in all of those cases. So that isn't a sample-based approach. It is on whether it's been flagged by our fraud risk factors. Then, depending on the risk assessment of an area, if we assess a risk area as significant and we would revisit the risk assessment based on some of these factors, then that would increase the sample sizes we would take in the detailed testing.
Okay, thank you very much. My second question relates to page 96 of the pack. And again, it's a comment that Deloitte have made on SAP management controls. I know that other members of the committee have commented previously how difficult some of the language is. The language in that particular comment is completely incomprehensible to anybody who doesn't have an intimate understanding of how SAP works, I would suggest. I wonder if you could just summarize it in layman's terms so that we understand what it is that is trying to be conveyed there, please. Thank you.
Mr. Howes?
Firstly, I would say fair comment. It is slightly difficult to understand. Generally, what we expect to happen is that any changes to the SAP system are done in what's called a non-production environment, so i.e. not the live working system. In this case, we felt that there were settings that meant some of the work being done in a non-production environment could lap over into the production environment, and that was inappropriate. We didn't find any evidence that that had caused a problem, but it is really any changes you're proposing to do, you do in this non-production environment, you test run them to make sure they give you the answers you expect before you run them into the live system. We felt there was a risk that the two could overlap a little bit, is my understanding of our IT auditor's rather complex finding.
Thank you, that's a lot clearer. And then my final comment is actually related to the observations that you've made, the management observations that you've made, and the responses from Dorset Council. So some of those responses appear dismissive of the issue. Some of those responses are asking for more information. It almost appears like a draft response, if you like. So my question was, you know, are those responses final positions? And do we follow up on those, either through Deloitte following up on them or internal audit following up on them? How do we know that those observations raised are actually addressed? Given a number of them cite they were raised in January 2022, so quite some time ago now. Thank you.
Yeah, so that's a really good point. Is there a sort of action track or anything to keep control of those, please?
Yes, again, we follow up on those in the following audit. So when we report on the outcome of the audit that we've presented the plan to you today for the 2021-22 audit, we will follow up as to whether these have been addressed in that audit process and report back to you as part of our ISA 260 report on concluding the 2021-22 audit.
So, question from me that I think that's sparked something in my head is around that IT privileged access. I'm sure that this committee should be concerned about the controls that are in place. Are they robust? How they are monitored? I think that's some future piece of work that could come to this committee to give us assurance. Is that something you think is possible, Mr. Dunn? He's nodding.
Yes, that's certainly something we could bring back to this committee. Offhand, I don't know. I would have thought it would be picked up as part of one of our internal audits as well, which you'd receive as a matter of routine. So I'll check whether it's part of a routine audit, and if not, we can provide further evidence specifically.
Yeah, that's as always. If SWAP are doing it, then it's covered off. But it may be something that slips through the crack, obviously, that we don't want. So if that's the case, then we'll bring it back. Okay, are there any other questions on item 7? No, I think we've... Oh, Mr. House, you wish to come back?
Just conscious I haven't answered Councillor Christopher's question on this, which we referred forward, which was on the county farms valuation. So the council is required to value all of its assets on a 5-year cyclical basis. It is up to the council to choose how it obtains that valuation, whether it goes out to an external valuer or whether it uses its in-house valuer. Whichever process they use, then we bring in our own property valuation specialists to challenge that valuation, hence the issues that were raised with the car park valuation that was referred to earlier. So they will challenge the valuation, and it doesn't matter who's produced that valuation, they will look at that valuation and challenge the assumptions that are in it. So hopefully that gives some assurance around the override of controls point that Councillor Christopher raised.
Councillor Christopher, are you happy with that response? And apologies for not remembering your question there. Thank you.
Your comments.
Okay, I think we've given that some good scrutiny. Oh, Mr. House wants to come back again. That's by all means.
Just for the public, anybody reading this report will notice at the beginning there is mention to a qualification of the audit opinion. I think we just ought to touch on that. We qualified the 2019-20 accounts on the valuation of a provision for appeals against the rateable value of national non-domestic rates properties. We felt that there wasn't sufficient evidence to support the number included in the accounts. If anything, we felt it was overstated. So that was a qualification on a particular number, just that one number, a provision in relation to rateable value in the 1920 accounts. Unfortunately, because that number appears in the opening balances of the 2021 accounts, the valuation, that issue of the qualification comes forward and refers to those opening balances only. So for anybody who reads the word qualification, just wanted to explain that it is only an except for the opening balance in relation to that provision. And I think it's just important we point that out. It doesn't say that there's a qualification on all the numbers in the accounts or anything like that, that there are major issues. It's just referring to the sort of ongoing effect of that issue from 2019-20 relating to one number, which is in the opening balances in the balance sheet. That shouldn't be there when we come to the conclusion of the 21-22 accounts. But I think it's important, in case anybody read the report in isolation, that explanation is provided.
Thank you very much. And duly noted. Mr. Dunn wishes to come back as well on that.
And just to join up the dots with the next paper, and potentially in anticipation of a question from Councillor Gray. So this... So essentially the qualification issue is a matter of over-provision on the business rate appeals. So we have unwound that, which has essentially freed up some money, which is why we've got an improvement in the financial position reported at Q3 for this current financial year, because we have unwound that provision. So we can just see you've got an audit recommendation that's carried through and sort of leads to the reality of our financial position this financial year. So it's a helpful point, hopefully.
Thank you very much, and duly noted. So we will ask to accept the reports. I think we've given them a good, not just noting them, we've certainly challenged them in all aspects. So not your normal quick session, Mr. House. But thank you, colleagues, for your time in answering them so comprehensively. Okay, I'm now going to move on to item 8, which is the Q3 management reports. I should add that these have obviously gone through Cabinet. We've been part of the budget setting process, and where there's been overspends, etc., they've been accounted for in the next budget, the current budget. So unless any members got any particular points that perhaps wasn't picked up in any of those very long sessions, and Mr. Gray's got his hand out, Councillor Gray, we will be brief, but Councillor Gray, go ahead.
Did you say be brief? I didn't get a chance to ask all my questions at the previous meeting that this was aired, but something that struck me right at the end of the report, really, and I don't know the answer to this, so it's a genuine sort of I don't know question, but debts written off, well, it's not a lot of money. I'm wondering, what's the process? Who decides that? Because I've never seen it in and it's not a great deal of money, but what is the process of writing debts off, and who makes that decision?
Pretty sure I've seen that in the reports. Is it on the forward element? There's a hierarchy of signing off, isn't there? I'm sure Mr. Dunn or Mr. Creamer.
Yeah, thanks. I'm Sean Creamer, Corporate Director for Finance and Commercial. We can circulate the kind of formal process and the kind of in terms of who's authorised to sign what off, but it's supposed to give some informal assurances. The team or the service that raised the debt in the first place essentially chase it and seek to recover it. In the event that wasn't successful, it kind of gets handed into the central finance team, who are involved in some of the invoice chasing as well, who also will look at like you hear of, like the kind of Experian credit check, credit search type things to try and locate people who perhaps have dropped off the radar for whatever reason. So we pursue a number of debt recovery activity within the services, then kind of hand it over to, I suppose, some more expertise and some more specific software to try and track people down or to come to an arrangement. In the event that that's also unfruitful, after a period of time, it will go to a senior officer within the service to recommend it for write-off. They consider what action's been taken so far in terms of pursuing the debts, and it basically agree that we've exhausted avenues possible. That then, depending on the value, will come through to me to also review and sign off. So again, assuming I'm satisfied that everything has been done that's possible to recover the debt, I'll then sign that off, or perhaps send it back and request for some additional activity to take place. I have asked that for a report going forwards that we summarise the reasons for write-offs to try and give you some indication, but predominantly within a lot of the debt, typically it's around some of the business rate stuff. It's that the business is no longer trading, that they've gone insolvent, or they've ceased trading, or they've left the area, for example. Typically, that's the main reason that we're writing things off, that the business no longer trades, that sadly the person perhaps has passed away, that the person has left the area, and we've essentially got no trace or been able to find them. In the event that someone does leave the area, we use things like Experian, which kind of makes that credit check. And so essentially, if somebody, for example, somebody did leave the area owing a significant amount of council tax or something, it may be that they then pop up on an Experian check or similar credit search because they've taken out a new mobile phone contract somewhere else. So there's kind of a match on their record. So we'd then be able to kind of write to them at their new address if we were able to find someone. And in the event that after a few years, the person still doesn't seem to have reappeared somewhere, then we would perhaps consider writing off the debt at that point. In the event that that person does then pop back up, we have the option to write on the debt, and essentially it would still be chaseable if it's legally pursuable. But for the accounting treatment, we write it off, saying that we don't expect to receive this, but that doesn't preclude us from then chasing the debt in the event that it becomes chaseable again, if that makes sense. Hopefully that gives some assurances as to the kind of fairly robust process that goes on in terms of chasing and making sure that we're only writing things off if we absolutely are assured on kind of multiple levels that that debt is not likely to be recovered.
Thank you. That's really useful. Are you content with that assurance, Councillor Gray?
Very. Can I go back to my original question about the capital funding, please? So just to remind people, I'm looking at Q3 report, thinking, what have we learned from the previous years? So 67% has been completed this year. And what strikes me is I'm looking for reassurance for the next council that we do build in contingency, both in terms of money and time, because we know what the market, I keep hearing the market is tough and we can't find, so let's build that into the programme. So I'm looking for reassurance there. Do we look at alternative suppliers or plans? What are we doing to sort of what I would call optimism biased around when it will be completed, because a fair number of projects do overrun. And I suppose I'm looking at the 24, 25, 25, 26, all the way up to 27, 28. And from a financial profile, we've got 120 million capital projects this year, 105, 106 next year, and then it drops to 40 and then 8. And I guess there'll be other projects that will fit into that. But it doesn't seem to me that maybe there's going back to my colleague's previous comment about that there has to be some internal capacity issues. I know they're externally delivered, but they do need managing. So do we look at that capital programme and try and match it to what we've got available? So all those questions about the capital programme, because residents do see that, I'm just looking for some reassurance that this specifically is being managed in a way that maximises the money that and the interest we get, but also the completions of these sometimes really big projects.
Thank you very much. I'm going to get Mr. Creamer to answer that. I think some really good points, and I think capital programme is often something that gets a little bit overlooked sometimes, as we focus quite rightly on revenue. Optimism bias, I know that's something that should be being built in, but it's actually quite a blunt instrument. If you're doing proper risk management, you shouldn't need, that's the starting point, and then you hone it down on really good risk management, schedule risk, and also financial risk management and applying it. Mr. Creamer.
Thank you. So quite a few parts of the capital programme to unpick, so I'll try and work through them in order. So the first bit around contingency. So you'll hopefully see in the more detailed appendix, which was part of the budget setting paper, that there's £7.66 million of money in terms of contingency allocated. That is to pick up perhaps rising prices, change in priorities, new projects that come through which weren't anticipated, etc. So we do have some financial money built in. In terms of the time and alternative plans, where we identify things, we of course would look at Plan B, Plan C, Plan D. For example, some of the slippage referenced earlier related to kind of the I suppose on the back of the kind of COVID pandemic, and where we saw a number of main construction players perhaps go out of business. We saw rapidly increasing inflation. So we will tend to look at alternative suppliers or alternative delivery routes for capital projects. For the large ones, we also look at obviously a competitive procurement exercise and different routes to market to attract people to come and deliver either in partnership or directly or independently for those. So again, there sometimes could be an instance where you've got multiple people competing for the bid in terms of price, timescales, etc. So in the event that one person perhaps was no longer able to do that, we could look at who else bid for it and look at alternative options. In terms of the kind of over optimism within the review, we did in the programme, so we did a fairly detailed review about a year ago, which was very, very detailed in terms of going through all the projects, literally line by line, understanding what's going to take place over the next 12 months and beyond. What would that look like in terms of timescales, pace, requirements, etc., to try and get that more granular detail. So we have seen, as was referenced, that this year I think is on track to spend perhaps like the highest amount of capital that's been seen in recent years. So perhaps we are seeing that there is a step forwards in terms of that rigor has resulted in more capital being delivered, more projects that people want to see as they go about their business in Dorset and being delivered for people. We will, of course, will do that again as we move into the 24-25 budget monitoring to look at those detailed project status reports, what's coming through the year. A couple of things that have happened in terms of the oversight and management oversight. So something called CASAM, which is the Capital Strategy and Asset Management Group, which is chaired by Aidan Dunn. That now also takes a detailed project status review of all capital projects with a spend over £2 million. That is essentially accounts, so the top 10 projects within that list account for 70% of the total capital budget. So that gives us a really focused kind of like bang for your buck in terms of having a detailed review of the projects worth over £2 million. Every 6 weeks that group meets to go through in detail what's going on in those terms of those projects, what's going to happen by the end of this financial year, to just really drill into that. So we've got that more kind of accountability, more oversight, more opportunity to discuss some of the risks or barriers with projects and then look for alternative solutions or mitigation that can be put in place. So hopefully that gives some assurances around how we've changed going forwards. And as I say, that accounts for about 70% of the programme, so therefore allows us to really focus in on the projects which are perhaps like make or break in terms of how much will be spent in any one year. There are some projects which do just kind of fall foul of the phasing, that the 31st of March, if the work hasn't been done, the invoice hasn't been paid by the 31st of March, it slips into the following year. So there may be some projects which are due to complete in April, May, June, for example, where it looks like the whole project or a significant chunk of the project is being phased, but that's perhaps just due to the timing of the year. But we do appreciate the slippage does look challenging. In terms of the tail of the capital programme, as was mentioned, that it's quite chunky at the start and then kind of phases out. A lot of that is to do with these are the projects that we know about at the moment. These are the projects that we've got in the pipeline. There will be new and emerging bids come through for kind of 26, 27 and beyond. And also a significant chunk of our capital programme is externally funded. So at the moment, we don't know what we don't know in terms of we don't know what bids might come available. We don't know what government funding and stuff we might be able to bid into in order to drive the capital programme in those future years. So there is, I suppose, capacity or scope within the capital programme to add on those new projects as they emerge coming forwards. So hopefully that covers the key points.
Mr. Gray?
Yes, thank you, Chair. Just two minor points to make. Looking at the 7.8 million that we put in contingency, that's roughly, what, 6.5% of the 120. I'd like to see some more factual contingency built in. So I don't know whether that is factual, but if we're not looking back to see what overspends in previous projects, we could base an actual figure on every future project going forward needs to have X amount of contingency. So if that is the case, that's fine. If it's not, it needs to be slightly more factual. And the other question, which really didn't get answered, was it's still bugging around my head whether there's an internal restriction on the amount of capital projects that I know they're done externally, but they do need a sense of internal management, and whether the capital programme committee have got a sense of how much we can take internally. Because I guess from an asset point of view, it would have knock-on. If we put more into managing external projects, we're doing less of our own internal stuff. So I'd like the committee to consider having a capacity model that understands what we can manage, albeit most of it is external. Thank you.
Thank you for that. I don't know if Mr. Creamer or Mr. Dunn wish to respond to those points.
Thanks. So the issue of I suppose there's two dimensions here. One is about the cost of some of our projects overrunning, and then secondly, we're not fully spending our capital budget, whether we've got capacity constraints on that. And I think just to elaborate on both those points that Sean's touched on, the first point, the cost of our programme overrunning, some of our capital programme the costs are higher for the reasons that Sean described. Other aspects of the capital programme, we simply have to say costs have gone up, therefore we can't afford to buy as much as we were going to buy. So an example of that might be in terms of vehicles. So we have got a vehicle replacement programme for our fleet, and it's cash. There's a specific capital amount, so we have to reduce the number of vehicles that we replace because we're financially constrained. So there's a balance. So some of the projects are unavoidably get more expensive and we have to pay. Others we can try and manage. So that's the first point. In terms of the second point about our capacity to deliver, that has been an area that we, I think, centrally financially have been concerned about. And as Sean described last February, March, we ran a project, a systematic review, meeting with each of the project managers to get a sense of that. I think there are a couple of areas where we think we need a bit more capacity, but the programme does vary year on year. So, for example, if we were buying a particularly large asset, a single purchase, it could be 20, 30 million pound purchase of an asset, that doesn't necessarily need proportionally more people to be able to do. So as the capital programme varies, there isn't a definitive, if the programme's that big, you need this many project managers to manage it. We have to look at each project case by case. So we do take account of that. We look at our internal capacity, but also where we need skills and advice and expertise, we do buy it in as well, and we see that through our consultancy and some occasionally our agency spend. So there's a balance to be struck. We do keep it under review, but it's certainly one of the areas I'd like to think that we're getting better at, but still room to improve further.
Thank you. That's a really good answer. I've got a question on my side. I mean, your specific example you gave where the number of vehicles was reduced, I would say that's sort of a good thing, but you've managed the output. The output, we haven't got as much money because it's, for whatever reason, that's the output. The outcome is we as taxpayer hasn't got the number of vehicles that it could have potentially got. And that's often perhaps that differential that we need to think about, being an intelligent customer as well. I'd also like us not to lose sight of the 30% of those capital programs which are in the £2 million, because actually, if they're all collectively perhaps taking the aisle, you know, because of the small amounts, and they're all building up with massive overruns and overspends, it may be sort of under the radar, a bigger problem we think. So I'd just like to know that we've got some sort of spot checking. Maybe it's 5% checks, 10% checks on those under £2 million projects as well. Is that something that we do?
Thanks. As you say, yeah, definitely not taking the eye off the ball on the 30%. So Kazam, the kind of capital strategy and asset management group that I referenced, is essentially an offshoot of SLT. So it's chaired by Aidan and has those executive directors attending. It has a number of subgroups, all themed essentially. So all themed. So for example, there's ones looking at highways and fleet. There's ones looking at kind of schools and the SEN program. So there's a number of subgroups which essentially allow that more targeted view. We also, as part of the monthly finance reporting, are liaising with project managers, looking to get latest forecasts and latest project status updates as part of the kind of business as usual activity that goes on. But it was just in addition to the senior oversight, has that kind of hyper focus on the projects which kind of make or break the capital programme, but all the business as usual activity is covering off those 30% that are the smaller projects as well.
Thank you. Councillor Corking, did you have a question?
Yeah. Thank you. This is page 150 of the agenda and 13.10. It's really, what concerns me about this is it's maybe not a huge level of debt, but it's that the length, considering it's with adult social care, the debt is raised but not actively pursued, whilst the Care Act assessment and substantive financial assessment is undertaken. There's a really high number of over 365 days. And I just wondered what the controls and mechanisms are in place to actually manage this, and that the level of debt doesn't increase. But also, that if these people are waiting for a Care Act assessment done, and it's over a year to take it done, I know that's most probably for another committee. It just concerns me that people are waiting this long, or they are receiving the care and we're paying for it, which, personally, they should be receiving the care anyway. But I just wondered, because more people are going to want care packages, how are we going to control the level of debt in that?
And thank you, a really good question. So as you referenced, firstly, just to confirm, these people will be receiving care. So nobody is left 365 days due to a financial assessment awaiting care. So they will be receiving the care. The reason for the gross without prejudice situation is that these cases will be going through, I think, what's called the Court of Protection. So that is the instance where it's not clear who has the legal authority to make a financial decision on behalf of the person. That will be down to their assessed capacity to make a financial decision for themselves. So I think they tend to be quite, I'm not an expert in this, but I think it tends to be quite complex situations where there perhaps isn't a family member or someone who's been given, I think it's like power of attorney or something like that, to be able to make decisions on behalf of the person. So they are essentially going through a court process to establish who can make those decisions, which, depending on the nature of the individual or their circumstances, can be quite a lengthy process. But as I said at the start, just to confirm that the person is receiving the same care and the same high standard of care that they would receive with or without. And subject to that concluding, there will be a financial assessment done, and we'd work out how to, if at all, they had to make a contribution to their financial cost of care as well. So.
Clearly, we don't have anyone from adults here, so perhaps putting you on the spot, but I think that was a good good answer. Councillor Cocking, are you happy with that?
Yeah, it's whether the person has mental capacity, was the term that you were looking for. But it's just, is that level of debt likely to be increasing, was my concern as well. But mostly my concern is that these people do receive the care, which I knew that they would be, but it's just the increase of the level of debt.
And so I need to refer to colleagues who are closer to it in terms of, are we seeing more or less of these cases? I suppose looking at the figures, so on paragraph 13.10, less than 30 days is about £500,000 due. 30 to 90 days is £568,000, which, based on quick maths, would suggest that between 30 days and 90 days, we haven't seen that increase significantly. And then extending that out to the whole year is 2.7 million. So it doesn't look like that's particularly increasing, just based purely on the rate of invoices coming through the system. For example, the 0 to 30 days isn't 50% of what we're seeing for the rest of the year. But I'd need to defer to colleagues who are closer to doing the financial assessments to understand whether they're seeing a trend in terms of more or less people coming through. But financially, I don't think it looks like it's increasing or decreasing, but perhaps not enough information at the moment.
Okay, thank you very much. I think we've given that a good going over through, so thank you for that. Where are we off to? Agenda, all right, okay. Item 9 was constitutional updates. Jonathan Mayer is unable to be with us today. He's asked that his update goes to the next committee, the new committee that's whenever that is, in June, I guess. So we will move on from that to item 10, which is the work programme. Again, you've got that in front of you. And obviously Jonathan's update will be on the next meeting. I'm just pulling it up for the June meeting. Yeah, so we just need to add Jonathan's report to that section. I had asked Jonathan to give an update. I think he referenced the procedures around voting in the forthcoming elections. I'm very keen that with the voter ID, etc., that there could be potential for legal challenges from people who are turned away, who believe they have the right identification and things like that. I've heard that verbally, so I think that would be a good report to come to the June meeting, if that's possible, to get that information about numbers involved and that sort of thing, and any problems. Is that something you can take away, Aidan, to Jonathan? He's nodding. Okay, thank you. Are there any other observations on the work programme? Any items that committee members think should be on there for future? Because I think one of the key things is perhaps that, you know, these agendas and work programme need to be member-led. Obviously, there's particular items which come through on the regular ongoing basis, but we do need to be putting our thinking caps on, or the future committee, about things, that issues they think need a bit of work on the controls, not the scrutiny, obviously that's somebody else. Okay. So back to the agenda. I think we're to the end, aren't we? Yes. So are there any urgent items to report?
There are no urgent items, thank you.
And to my knowledge, there is no exempt items to come to us. In that case, that concludes the meeting. Thank you very much for your attendance and for a really good discussion. Thank you.